Hello, my wonderful people. Today is a brand new day again, and I just thought about it. I did yesterday a strategy about the MACD, and I thought I would give you something today because some people have very small accounts and they are not able to catch spikes to begin with. So today I continue with the MACD, but in this time round, we are going to do what we call scalping, or going with the market trend, something like that. Okay, so in this sense we'll be selling boom and buying crash. I'm not giving you a surety, but this is a strategy that I've used and it is working for me. Okay, so let's begin from the MACD. I'll give you the settings of the MACD. I've just tweaked something a bit so that it can fit my strategy, and I've added the moving average 5 to the MACD window. Okay, so I'll give you the settings by the end of this tutorial. Now we've reached the end of our chart. Now this is how this strategy works. On the main chart, as long as we are in an uptrend, that means this side of the MACD will always be facing up. So you know that we are on an uptrend. Okay, so the yellow line, is a moving average 5. I'll give you the settings later. So, and this red line, the red line is the moving average for the MACD. So I changed from yesterday's, which was 12.26.1, to this time around the settings are 12.26.5. So this moving average is 5. And during normal times, you will find that the spikes of the MACD, or the bars of the MACD, will always be above or below this moving average 5. Okay, so the moving average is called the signal line. Now, how do we use this strategy to trade? In a situation like this here, the moving average has to touch this red line. In the settings, I'll show you how I set up this top red line. Okay, this I'll show you in the settings. So the moving average 5 has to touch that level 90, or the red line, and then it will come and cross with the moving average of the MACD. Okay, around a place like this. So when it crosses with the moving average MACD, and if you can see clearly across, and especially when the crossing is happening on the red line of the 90 level, then know that that is a valid signal. And with that, you can always place a sell trade for 10 to 15 minutes. I would probably tell you to go for like 10, 11 or 12 minutes, but you can comfortably sell for 15 minutes, and it applies to both boom and crash. Okay, so as long as the MACD has come and it's touched level 90, the moving average 5, the yellow line, has come also and touched level 90. So when the moving average of the MACD is coming, as it is touching, the moving average 5 is already on its way down, like it has already made a bend and it started going down. So they will cross somewhere. That is a valid signal, and you can always place a trade of 10 to 12 or 15 minutes. Okay, so let's look. So this one here, I would say, was a valid signal, though it's not very clear because we are not seeing Yeah, it crossed at the peak, exactly at the peak. So let's see if we can be able to get 15 minutes candles. Do you see? Before that spike came, how many candles did we get? So we were supposed to have placed our trade here. Okay, here. Let's say you place the trade after the top Ichimoku. We were supposed to have placed the trade there when the yellow line on the moving average was starting to come down. So we count 15 candles. No, let's go for 10 candles. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. On the extreme, you went in for 15 candles and you got your money in. Okay, so this was one trade setup. Let's move to the next. Let me also talk about the zoom level. The zoom level, I mean this. Okay, this is the last zoom level. This is the last zoom level. So we are using zoom level number 3. So let's increase our zoom level. Sorry. That is zoom level number 2. That is zoom level number 4, number 5. So let's go back. That is zoom level number 3, what I wanted. So this was our first trade setup. We got our 15 candles there. I will use 15 minutes as an example, but when you go into the market, use 10 minutes, okay? Between 10, 11 or 12, take profit and leave the market. Let's go back again and look for another. This would have been another setup, but mark this yellow didn't cross with the red at the peak, so it was not a valid trade. Okay, so and you see, because it didn't give us a proper setup in the beginning, that showed that the trend was to continue going up. Okay, so you have to be very keen with these small instructions. There the yellow line has touched the red. There it's crossing. That is around that point. Okay, they've crossed, and at exactly 0.90, the red line on top. Okay, so let's see. Take around that place. We were supposed to have placed our trade around here immediately after the Ichimoku at the top. So 1, 2, 3. A small spike came, but that we would have recovered. So we will continue counting 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. You got your comfortable 15 minutes and you're out of the market. Okay, but I've said you do 10, 11, 12 minutes at most. So you see, you were caught by a spike, but it was a small one and you always recovered. So don't be scared of a spike in such a situation. As long as the moving average here, as long as this moving average 5 has crossed to the signal moving average for the MACD and it's on its way down, and again these spikes, these bars for the MACD has always been covered, or been covered by this moving average. Like the bars are below the moving averages, so it tells you like we are on a downtrend and it will go for some time. So that gives you room to buy for like 10 to 12 candles. Okay, so let's look for another setup. Please understand that this strategy works for both boom and crash. So for boom, you will be selling at level 90. For crash, you will be buying at level 10. Again, you can still use this strategy to catch spikes, but I'll not be talking about that today. Look at this. Look at this. They've both touched around level 90 and the MACD is already at level 90. Do you see? Did you get your 15 candles there? Yeah. Here, when they crossed. Did you get your 15 candles? Of course. A lot of candles down there. Okay. So you placed your trade immediately after the Ichimoku on the main chart crossed. That is Ichimoku 6. So when the trend crossed the Ichimoku 6, you placed your trade and you came all the way down. So you got your 15 candles there. I repeat again, I'm using 15 as an example, but when you go into the market, please do 10 to 11 candles. Don't go the extreme of 15. Okay, there again, another setup. So there, you are caught by a small spike. Okay, by a small spike, and immediately the spike caught you. Let me put a line so that we understand what we are talking about. You are supposed to have placed your trade there because that is what the market showed us around this point. Okay, yes, so you are supposed to have bought there. Now we came down a bit, immediately. So this is the first time that you are caught up by a spike. Okay, so if the spike that gets you and you had moved into profit like 5 minutes, okay, and the spike comes and puts you into a negative of like 2, 3 or 4 candles, like you see the spike that has come is big, and at that time, please check what is happening here. Let me bring. Please check what is happening around this area. Okay, if this yellow moving average 5, do you see when we are in this location here, the moving average is at the peak, which is touching level 90. So, and then you placed your trade, and after a few minutes, you are caught by a spike, that spike, and the spike puts you into negative, around negative 3 candles at most, so negative 3 candles. So at this time, there is no need for alarm if the moving average is still in place. But take this warning seriously. If you move, oh my god, I just have to go back because there's something very important I was trying to explain there. I'll have to go back all the way. Unfortunately, with mobile phones, you will always experience these challenges because anytime you press the screen for some time, it takes you to the current market price. So you have to be a bit careful. I think we're almost, I think it is here. Really? No, still far. Here we are. Okay. Oh yeah, we had placed this trade and it was successful if I'm not wrong. So the setup is next. The setup is next. Oh, do I really see it? I think it was after this setup. So anyway, I think I'll still find another location like that. So this was not like a successful setup because the moving average had not touched level 90, so you ignore that. This also was not a successful setup because the moving average had not touched level 90, so you ignore that. All these. But Makio, if you had done your price action or analysis on the higher time frame and you knew that we are on a downtrend, you can always place a long downtrend trade. Okay, so I will not focus on that because this is a 1 minute strategy. Fine, so I will not try even to do the trend trading in 1 minute. So for you to do the long term, you have to have analyzed the market. Check here, they crossed, and you placed your trade there, and you got your whole 15 minutes successfully. Okay, so this was not a successful signal, so I would not have placed it. We are still on a trend trade. This also was not a successful signal, so I would not have placed it. Same as this. Please note that when we were crossing down here, the moving average was not at level 90, so it just moved as we went down, so it was not a successful signal, so I would not have placed it. Okay, as I told you, you can still use this strategy to catch spikes, but today I'm just focusing on growing small account, which is a selling boom and buying crash. Look at this, though it was not like a successful thing. Okay, I would have ignored that. You know why? When we were here, when the MACD started coming down, the moving average had not reached level 90. Okay, so I would the moving average 5. Let me bring an arrow so that you understand what I'm talking about. I mean this. So this yellow line had not touched level 90 on top. Okay, so I would have ignored that. Okay, and you see immediately after that the spikes were still coming, so I would have really ignored that. Another scenario here, this setup here can be very interesting, where the MACD is way far below and the moving average 5 has already touched this. So the moving average has already touched level 90, but the MACD is way far below, you see? So it was not a successful setup. So as long as both the moving average of the MACD and the yellow moving average 5 have not both met at point 90, please ignore that signal, okay? Please ignore that signal. You see, like here, when 90 was immediately after that, it's like it was pushed up to fill in the screen. So this for me is 50-50. I can place the trade, but I would not go for long, like 5 to 8 minutes. Okay, so let's check. You see, yeah, it still gave me like around 8 minutes, because by the time you see here, when yellow had touched but the red and MACD had not. But what would give you more, like the market is ready to reverse? Look at this. Sorry. Look at how the MACD is behaving at this point. Like the red line of the MACD was already starting to cover the bars of the MACD. You see, so it was telling you the trend is ready to come down. So I would have placed a trade, and immediately it moved. You see, it squeezed in and filled the screen, and it touched level 90. So I would have placed a late trade, and I would not have gone for long, like 5 to 8 candles, and I'm out. And you see, you got your few candles there. This is a very wonderful setup. Very wonderful setup. let's see there. So the moving average at this point had touched, but the MACD was still far. We come, so the moving average had touched, but the MACD was still a bit far, and then the MACD came untouched. By this time the moving average had moved a bit down, and then immediately after that, before even the yellow and the red line could cross, there was another spike on top. But immediately after that, now check this point, when the yellow started now, bowing and facing down here, when it started facing down and it had now officially crossed to the red, then from there you could have placed your trade and gotten a few. So you see, what I want to make the difference between what I was trying to explain on the other side that got lost and here. So you placed your trade around so you placed your trade, sorry, around as it was crossing, the Ichimoku was crossing, so you placed your trade around there, and we come down. A spike caught you before your 15 candles was over. That was 1 2 3 4 5 6 7 8. So a spike caught you after 8 candles, and it put you like into a bit of red. But if we continue down, check the level of the MACD, check the level of the moving average. Like they should, after the spike, they should be stable. They should not shift, like go to the middle of the indicator window. What I mean is, this MACD bars, the red line for the MACD, the yellow line for the moving average, should still be stagnant within this position. They should not shift, like enlarge or become small, okay, after the spike. So the window should still remain the same, like they should not shift in any way. So it will still tell you that the trend will continue in that direction. That is what I was trying to explain the other time when the window got lost. So the spike has come, it's put you into some negative, but let's check if you are able to recover. Do you see? Do you see? So you recovered and still got some 2-3 more candles to fill in your 10 candles, and you're out of the market. Okay, and you're out of the market before the next spike came. Are we together? So this gave you a very comfortably 10 11 12 candles, very comfortable. Let's count. So let's take it like we took it from here. 1 2 3 4 5 6 7 8 8. It spiked, so it took us to 0 1 2 3 4 5 6 6 7 8 9 10. 10 is where the one on the purple line. 10 11 12 13 14 15. Solid 15 minutes, but as I said, 10 minutes is enough. Okay, so 10 minutes, be out of the market, take your 10 minutes and go. Let's continue. We look for another setup. All these are strong downtrends, so that you would have done analysis on the bigger time frame. I'll still do a tutorial on how to do analysis on H1 to be able to trade for long. Okay, check here, both lines met at 90. Both lines met at 90, so you're supposed to have placed your trade immediately after here. yeah, because they both met at level 90. So immediately after your Ichimoku, you can place your trade. Let's check. Did you see? You've gotten your whole 10 minutes before the next spike came. Did you see that? A whole 10 minutes before the next spike came. Check, you placed your trade around here. So let's count 10 candles. 1. This is where you placed your trade. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. That is where your 15-minute candle ended. But again, we said 10 minutes. So you got your 10 minutes and you're out of the market. Okay. Let's look for another setup. You see all this? The moving average 5 was touching level 90, but the MACD had not reached that point. Now, do you see that the MACD has come because of the spike that happened on top? It's forced the MACD to fill the window. So let's see, immediately after they cross there, you got another setup. So this is what I was trying to explain. You see, you placed your trade. Let me bring a line so that we are in agreement. Sorry. So you are supposed to have placed your trade around there. So we came a few minutes, a spike caught you and put you like in another like 5 to 8 minutes loss. At this time, if it puts you around those minutes in a loss, check your window, this window. Check that the MACD and the moving average should not shift like squeeze to fill the window. Let's move and see. So it is still stable. It is still stable. It didn't shift. Okay, it didn't shift, and there you recovered your money. Okay, so you are able to recover your money as long as these MACDs didn't shift like to shrink or fill the window or something. As long as it remained in the exact position as they were, you can still hold on to a trade. I'm looking for a position where after the spike you can close to avoid further losses. Okay, because let me tell you the truth, there's no 100% strategy that will give you like all the time a winning signal. But for this, if you are able to keenly follow the instructions, number 1, you make sure you are using zoom level number 3. Point number 2, the moving average 5 and the moving average for the MACD, the red one, should be able to meet at point 90. Okay, for booms, and level 10 for crashes. So if that point has been met, so and you place your trade and then a spike will catch you, now focus on how this MACD window will behave. If it doesn't shrink in any way, it will remain on a stable position. Know that you will recover. But if it shrinks, I pray that we'll get another situation like that. I will explain to you using it. But if it remains stable as it is, like you see, we placed a trade here and then continued as spike quarters, but we continued when the window was still small, it didn't shrink or something, and all this far as it is, like we are moving, put your eyes on here, it's not shifting in any way. Okay, if another spike is to come, you will find that this MACD bars will shift and come towards the middle of the RSI window that we are using. Like it will leave level 90. So be very keen. Like a spike comes, but the MACD does not leave level 90. So that will tell you that our signal is still stable and will recover from the spike. But if a spike comes and it shifts from level 90 and comes to around level 75, like it's no longer touching 90, that is a very dangerous indicator to you, telling you that the market was still trending and going up and another spike will soon come. So you have to close that trade immediately and be out of the market. Okay, so finding such situations is a bit rare. Okay, and can you imagine, like, all this time we've been trading those opportunities that came. We were specifically on an uptrend, because you see even the moving averages that is in my window, the white moving average that you're seeing is a moving average 200. So, and all this time the bars of the bars the chart is above the moving average 200. So to tell you that we've all this time been on an uptrend, yet we are still able to get our 15 minutes, 10-15 minutes. Okay, so if you follow the instructions keenly, you will not be caught by a spike. But if you are caught by a spike, be keen to check how the MACD, this level, will behave. Make sure that it is always at level 90. If it shifts and comes to level 75, know that it is giving room for another spike to happen. So you must close your trade immediately with that small loss that you've got. Okay, and that can be, in this trade specifically, it put us into like -5 candles. So can you imagine, we already caught like other 10 opportunities that were in profit in a good way, and then only one puts you not again even into like negative a whole 10 candles, but it put you into -5 candles. So that is one trade in many that you can be able to lose. Okay, so be keen to note that. Let's continue and see if I can be able to get such a situation. So this was not a proper trade, so I would not have placed. Check this here. Check this here. This. Could you have placed this trade? For me, it's 50-50. Yes and no, according to how much. Because when it was... Oh, sorry. Again. These Android screens are very sensitive. But I love using the mobile phone to do my explanation because it's much easier. What I've come to learn is that if you get a strategy that works well on phone, stick to the phone. I use the laptop as well, but I'm a bit careful because of the zoom levels on the laptop and the zoom levels on phone are a bit different. So the one for the phone can be a bit exact on according to the strategy that you've got. So what you get on the laptop can be challenging, like configuring it to get the exact pigmentation that you would get on a mobile phone, and then coming now to get the zoom, because the zoom levels of the phone are different from the zoom levels of the laptop. So I'm a bit careful when it comes to using the laptop if it is a phone strategy. Okay, and a phone strategy will give you the exact thing that you need, especially if you understand your zoom level very well. Okay, so though understand this, I use both the laptop and the phone to trade. So it's not that I'm stuck on the phone alone, but most of my strategies I execute them on the phone and then try to transfer them to the laptop, because I need to be seeing all the four pairs as they are happening, like the boom 500, crash 500, boom 1000, crash 1000. So I just create a duplicate mobile window like on the laptop and make sure I display all of them. I'll take a screenshot of a few so that you can see how I place them. Okay, so check this. This was a very wonderful signal. You placed your trade around there and got your 15 minutes. Let's go again. So you see all these spikes where they were happening, you had not met your requirements. So for that, there you see As long as they've not crossed, a spike came. You had not crossed, it was not a valid one, so you had not crossed. We continue. When they crossed that there, when they crossed, you place your trade and came all the way and got your 10 minutes. You see? Let's still look for another there. So the moving average is still very far. So you see, as long as it didn't meet the requirement, you will find that immediately before you get your 15 candles, the spike will have come. Okay. You see, all this. Let me give you another pro tip. Take for example, your main window was still full like that, and you're not so sure of this of the signal that you've gotten and everything. And as you continued moving, did you see what happened? Take for example, let's say this was our valid signal and we placed a trade, and then we were caught by a spike. As I told you, focus on this. Even after you are caught by a spike, let it not shift from level 90. Okay, so you've gotten your signal like that, it's very exact, you've placed the trade, and then we continued and the spikes came. But as long as it is still intact at level 90, you will recover from that spike. Let's continue. Let's continue. Let's continue. Did you see that? The moving average, one spike came, of which it is not a major spike to tell you that a bigger spike is coming or something. And if, oh, sorry, again, shit, sorry for the foul language. But I was explaining something that is very important that will help you to be keen. To be keen, so that when you are caught by a spike, you will know if this spike is recoverable or I need to close and leave the market with that small loss. Okay, that is what I was trying to explain. For you to know the kind of spikes that come, whether it is a spike that you will here, we are here. So we've gotten a perfect signal like that. I was using it as an example. It was not very perfect, but I was using it as an example. So you've gotten a perfect signal like that. We continue. We continue. So we came and immediately you reach here as another small spike comes. I tend to believe, okay, at this time you would have gotten your 10 minutes and gone out, but if in case you had not gotten your 10 minutes and gone out and that third spike catches you, did you see that? Did you see the shifting? And the moving average, no, the MACD, and at this time, no other spike has happened from this third spike that just came in right now. And this third spike was smaller than the previous two spikes. In case you are still in the market, I'm using it as an example. So you see this, it shifted from level 90 to level 75. So this room that, you see, this is where we are. We move forward, it shifted. So when it shifted, know that this room that has been created here is room for another spike. Okay, it is room for another spike as long as it shifted from level 90. That is what I was trying to explain earlier. Please, if you are still in a trade, close that trade with an immediate effect, because the spike that will come at this point is very massive. This room that was being created here is a room for a bigger massive spike. Okay, let's see. Did you see that? Wow. So if you wanted to catch a spike, this would have been the perfect place to catch a spike. Okay, two massive spikes came, and if this got you in the market, you would have been in a very bad position. Okay, so it is a strategy that you can use to scalp the market, get your 10 minutes and you're gone. And you can still use this strategy for 5 minutes. For 5 minutes it still applies, but let it be that both are crossing at level 90. You see, like this here. So let it be they are crossing at level 90, both, like here, like this. No, that was not still also a perfect one. That was still not a perfect one. So it's a bit difficult to get the perfect ones here. So that was a perfect one. They've crossed. And there now for M5, you will be in the market for a very long time. Did you see that? So both touched at level 90 and they crossed, and it came all the way. You are supposed to have gotten sorry. I'm looking for line. Take for example, this is where you entered into the market and you caught all this. So do you know how many these are? Like from here all the way, from here all the way to this point here, when the red on the MACD touched level 10. That was supposed to be 1, 2, 3, 4. One spike came, 5, 6, 7, 8, 9, 10. 10 times 5 minutes, that is a whole 50 minutes in the market. And one spike came, but you recovered from it, like it was not a major spike. Okay, so you can still use this strategy in M5, you can use this strategy in M15, you can use this strategy in H1. But I'll still do for the higher time frames. So this tutorial was specifically to focus on 1 minute. So 1 minute, take your 10 candles and you're out of the market. 5 minutes, take your 30 to 40 candles, which is 40 minutes, and you're out of the market. Okay, if you're using M5 candle. If you're using M15, that is a different case. So we'll talk about that in our next in my next tutorial. So make sure you subscribe to this channel. I'm ready to still give you better tutorials, and all these strategies are premium strategies that I've been using to make money. Okay, and we are sharing a lot of resources in our Telegram channel, and all these resources are not like my own personal resources. I have a lot of resources that I've bought from other forex traders. So for forex signals, forex indicators, premium. I don't share anything that is not premium. Okay, I share things that are only premium, things that I know will be beneficial to you. So join our Telegram channel. I will be dropping something there daily for, if you're trading boom and crash, if you're trading forex, you will always get something to help you in our channel. So have a wonderful day. God bless you. Bye bye. Like, comment, share, subscribe, and see you in our Telegram channel. I'll be creating a chat